Amisha, good to have you with us on board, and Happy New Year from Team ET now. It looks like we are getting a little bit more enthusiastic, if you will, in terms of the move that we're seeing on D Street. 10,906. What's your outlook for the year ahead?
So I also wish all of you at ET Now a very happy, healthy and prosperous new year 2019, and also to all the viewers. And I personally also believe that 2018 across asset class, whether it is equity, debt, real estate, currency, most of the asset class, it has been a wealth destructing year. And as you know, almost more than 60% of the stocks corrected more than 30%. Despite a very modest gain in Sensex, large part of the stocks gave negative returns. And I think compared to that, 2019 will be a much better year, both in terms of the wider scale participation of stocks in the market, as also the select stocks which will be larger in number as compared to last year, will give any portfolio, I think, a good 15-20% return potential, despite the volatility which all of we expect in the market, which will continue next year. So I think outlook for 2019 in my mind is much better than that of 2018.
And Amisha, you were one of the first ones to really come out in the mid of 2018 and really, sound that warning signal that just look out for your portfolios, because there's going to be carnage for the broader markets and even more so for the Nifty as well. And that exactly has played out. But now that you have a better outlook, Amisha, as we go into 2019, where would you hunt within mid and small caps? At Prabhudas Lilladher, do you have a buy list that you've handed out to your clients?
So the first target within the mid and small cap, naturally when market has corrected so much, and the volatility is also going to be part of the game next year, is to continue to remain within absolute quality. And within absolute quality, the three sectors broadly which we think one should keep in mind is A, in and around domestic consumption, B, selectively into capital goods, engineering kind of stories, and C, within that, banking and financials. But that is mostly large cap, so I would still say there are certain pockets within the mid and small cap also which one can look at from the perspective of banking and financial. But largely these are the three sectors, and within that, quality, reasonable liquidity. I wouldn't say full liquidity in small cap is not possible, but quality is a must, and that combination I think has potential to give very good returns. So when we cover this kind of a mid cap small cap universe, as an organization or as a PL, we do know where to look at, but not most of the stocks can be under our coverage, because coverage universe is still little limited as compared to the opportunities when sectors within the coverage or the emphasis that we want to give are changing. So as a combination of covered and uncovered, we have a basket of stocks which we think should give very good returns.
Okay, you're bullish on consumption, but I remember, Amisha, in our last interaction for the Diwali show, that is a few months ago, you were pretty upbeat in terms of banking stocks. You had liked ICICI Bank. Do you continue to like the story?
Absolutely, that corporate banks, and particularly within that, ICICI Bank is one of my top picks for 2019. A, of course, because I feel that capital adequacy is really very good, and now since they are, all that extreme large assets which they had to declare and work on are all most of them are declared. So the new burden of assets going bad and the whole focus of management being there, I think is behind us. So that is the first reason Apart from that, I think the growth also will come in their lending and advances. And most importantly, I think that the space to some extent which will be vacated by NBFC to some extent, I am saying, but it is private banks which can within say retail and SME can do much better job. Plus ICICI has very valuable subsidiaries. So net of subsidiaries, it is still available close to about, I think close to about 1.3 2020 price to book, which according to me is still very attractive. And gradually I think, and it's not just 1 year call, I think over next 2 to 3 years this will continuously keep doing very well, but even this year it should give very good returns.
What about NBFCs? You know, the incremental growth has seen coming off. Do you think that that's going to largely remain the story for the year ahead?
So I think a bit of the NBFC growth is bound to be tapered down, except for a couple of names, and those couple of names being of course Bajaj Finance or Mahindra Finance or L&T Finance, which are very, very large and reputed corporate houses. Apart from that, in quite a few, the credit growth will sober down. But if you see, prices have also corrected so much to more than probably reflect the kind of slowdown in credit growth or addition in book value is likely to occur. And I think most of these larger NBFCs had created a niche segment for themselves, which is not directly in competition with banks. So their NIMs would be largely slightly better. They will have a space for themselves to operate. So I think that the large part of pain of NBFC is behind. At the same time, I do feel that NBFC is not the sector which is going to be the sector of the year for 2019 as it was for 17 and 16 etc. But select NBFCs can still give very good returns.
Okay. Amisha, let's move away from that and chat a little bit about a sector that has done fairly well for the year gone by, and that has been IT. No doubt a lot of the mid-cap names as well have stood their ground. How have you read into the earnings that we've seen, and what does this year bring for IT, particularly when it comes to numbers?
So I think, there are two ways to look at the market for 2019. In my view, 2019 will have 2-3 distinct trends as compared to 2018. 2018 was a year of developed market, and emerging market were at the receiving end, and so also their currencies, and so also the stock prices. I think in 2019 it will be year of emerging markets, so we will see FI from negative FI flows, positive FI flows, as also that will help currency, and overall the business sentiment also will continue to be good. With this theory, I feel IT is defensive, but there is a segment in the market which feels volatility till elections will be very high, and they think IT would be a good place to hide because of a very competitive valuations and the nature of free cash generation. But in my view, I will remain underweight on IT for 2019.
Great to have you as we kickstart year 2019, and here's once again wishing you all a very happy new year from all of us.
Thank you so much.